Hello and welcome to another episode of the Hotel Advisory Expert channel. I am Ashley Montero and today I am going to be talking with you about the importance of studying the financials of a hotel before you decide to exchange the cashier's check at the land office. When you buy a hotel, you are not just buying real estate, you are also buying a business, a running business, and it really does help to dive a bit into the profit and loss, also called the income statement, and the balance sheet to check on the health of the asset that you are buying. So let's talk about a few key concepts here. In the profit and loss account, you are looking at ADR, which is the average daily rate. Now, the average daily rate is multiplied by the occupancy rate to arrive at the top line in terms of the revenue that you will make on the hotel. I think it is really important to understand what is the revenue potential from the ADR. For example, the current owners could be actually underselling the asset, or they may not be doing something called revenue management, which is flexible rates on the hotels. For example, if you take the city of Pattaya, on the weekends you can charge more than the weekday because the local market motors down to Pattaya over the weekends. So starting from Friday night, you can actually increase the rate without upsetting your clients too much, and on Sunday bring the rate down again because you want to stimulate the occupancy to go higher, even though there is not that much business in the market on a Monday. So the ADR is a key concept where the rate tells you how much income this hotel is capable of making over a period of time, and in which months, if there is a peak season, you can make more income, more revenue than other months. This kind of breaks the glass ceiling that you would normally associate with a static rate. So the ADR is a key concept in understanding the profit and loss or the income statement of a hotel. Now this brings me to the fact that a slight shift in ADR could happen because of factors that are beyond your control. So it does help to actually dive a little deeper into what makes a destination tick. I gave you the example of Pattaya, which is a destination popular with the domestic market, with Thais over the weekend. But let's take a destination like Koh Tao. Koh Tao depends upon the diving market, and for that depends upon the monsoons, which in the case of Koh Tao is the northeastern monsoon season. So your season for diving is not defined so much as what is normally season in other parts of Thailand, which is normally the winters and summers, which are the low season, but it is defined by when you can dive smoothly, when the seas are choppy or otherwise. So the balance sheet would then take you on a further exploration of the condition of the asset and how much profit you are making, and whether it is possible to keep more of this profit or spend it on the asset or give it to the taxman. Now all these factors will come out when you start to study the asset. So I think part of the due diligence process has to be to look at what you can earn in terms of the profit and loss account. There is another key concept that I'd like to share with you, and this is the gross operating profit. Now the gross operating profit tends to be very high in the case of low budget hotels. It is typically, this figure is around 40 to 45% in the case of mid-scale hotels, and drops further down in the case of luxury hotels. Now the gross operating profit is a key concept which will allow you to find out whether the hotel is being optimally run, efficiently or otherwise. And I think that if a if you're buying a hotel that is, for example, a guest house, then your gross operating profit should be upwards of 50%. So there are a lot more financial concepts that I could share with you. And if you would like to see more videos on subjects around hotels, how they are to be bought, how they are to be run, please subscribe to this channel. If you like the content of this video, please hit like. I will see you very soon with more interesting content like this one.